CPI print in particular. And with that read that we got at 4.9% headline, that represents the 10th consecutive inflation read that is softer from where we were in June of last year.
From my perspective, I'm still quite cautious on the economy and the markets. And a lot of it comes down to the fact that, as I said before, the bills come due in terms of QE. But the Fed, it may have stopped tightening. I would say that's very likely. But the idea that the Fed's going to start easing anytime soon, I think, is very, very unlikely.
Just reflected in the University of Michigan print, obviously consumers getting a little bit more nervous about where the economy is headed.
Hello and welcome to today's video. Have you been keeping an eye on the current state of the economy? Some say things are looking up, but others, like Peter Schiff, have a different story to tell. So what's really going on here? Is the economy really heading towards a potential depression? Is the US in a financial crisis worse than '08? In today's video, Peter Schiff discusses the recent CPI report and inflation consequences on the economy and market. To know more details, stay tuned until the end of the video. And if you want to stay up to date with the latest crypto insights, markets, and economy, make sure to hit that subscribe button and the bell icon. Okay, you ready? Let's dive in.
Well, I guess it's not quite as bad as it was, but it's not good. I mean, if you thought prices were high before, they just went up another 4.9% from where they were a year ago, and that was up a lot from where they were a year before that. But of course, these government measures are not honest. You basically have to double the official numbers to get a better idea of what's actually happening to prices. So if the government says they're up 4.9%, they're probably up closer to 9.8%. That is a better read on what Americans are struggling with. CPI was designed to manipulate it. So there's a formula. They don't just have a fixed basket of goods and just compare the price now to the price a month ago or a year ago. That's what they used to do in the 1970s. They don't do that anymore. They tinker with the basket. So the methodology for calculating the CPI has been designed to produce a lower number than what we used to get when we had a more honest measure of prices. So that's by design. The government doesn't have to lie. The CPI does it for them. We're going to have high interest rates and high inflation. And, you know, because interest rates are prices. It's the price you pay when you borrow money. The price is going up, just like the price of everything else. And in fact, interest expense is a major part of every business. You have labor costs, you have raw material costs, you have rent, and then you have interest. And as interest goes up, well, that's just another cost that you need to pass on to your customers through higher prices. So it's a self-perpetuating spiral. What we really need to attack inflation is lower government spending. Government needs to cut spending, but that's not happening. In fact, they're doing the opposite. Under Biden, the government is increasing spending, so they are throwing gasoline on an inflation fire. The reason that Americans continue to enjoy a higher standard of living than what we would normally be awarded based on our collective productivity is because of the dollar's role as a reserve currency and because our trading partners are willing to accept the dollars we print for the goods that they produce. And they're willing to hold on to those dollars by loaning them back to us, by buying our treasury debt or mortgage-backed securities or other debt instruments. So we basically get to buy stuff for lower prices and then borrow money at lower interest rates. Now, if the world stops wanting to accept our dollars because they no longer have confidence in the dollar's future purchasing power, in the exchange rate of the dollar versus their own currency, then what that immediately means is prices of everything that we want to buy go way up, and the cost of borrowing money goes way up. So Americans see their standard of living go way down because if the prices of everything goes up, they can't afford to buy anymore. So now a lot of the things that we take for granted, we can no longer afford. And to the extent that we need to borrow money, we can't afford that either. So the entire economy just collapses, and that is the disaster that we are heading for.
The current situation might not be as rosy as some make it out to be. According to Peter Schiff, gone are the days of a simple price comparison for a fixed basket of goods. He believes, nowadays, the CPI is like a master illusionist, playing with formulas and tinkering with that basket of goods. In fact, to get a more accurate view, we need to double those numbers. According to Peter Schiff, there's a double whammy here: high interest rates and high inflation hitting us all at once. Now, if we want to kick inflation to the curb, we need to address the elephant in the room: government spending. Unfortunately, the current administration seems to be heading in the opposite direction, with spending on the rise instead of taking a nosedive. And guess what? That's only pouring more fuel into the already fiery flames of inflation. Prices of goods are going to go through the roof, making them as unattainable as a unicorn on roller skates for Americans. And guess what? Borrowing money is going to become crazily expensive, like trying to buy a mansion on a lemonade stand budget. So there you have it. High interest rates, high inflation, and a whole lot of economic juggling.
As long as there is no disaster, we'll keep kicking the can down the road until one happens. And the disaster that's coming, I think, is going to be a sovereign debt and currency crisis. So much worse than just the garden variety financial crisis we had in 2008, because this time it's not just going to be subprime mortgages that are the problem. It's going to be U.S. Treasury debt that's the problem. Nobody is going to want to own our sovereign debt because of how high inflation is. And that's also going to create a dollar crisis. And so this is where we're headed, and it is a big disaster. Everybody wants to pretend that we're going to have a crisis if we don't raise the debt ceiling. No, we're going to have a crisis because we do raise the debt ceiling, because we've continued to raise that debt ceiling rather than dealing with the real problem, which is not the ceiling, but the debt. The ceiling would be the solution to the problem if they only stopped raising it.
According to Peter Schiff, a disaster is on the horizon that could make the 2008 financial crisis look like a walk in the park. Picture this: a sovereign debt and currency crisis. It's like a perfect storm, surpassing the challenges posed by those notorious subprime mortgages. This time, we're facing a real beast, a catastrophe that could have far-reaching consequences. So what's the deal? Well, here's the scoop. As inflation continues to rise, investors are getting a little hesitant to hold on to US Treasury debt. And you know what that means? It leads to a crisis, not only in our debt, but also in the very value of the dollar itself. Talk about a double whammy. Let's get into the next clip to hear more from Peter Schiff. But before jumping ahead, be sure to like and share this video.
I think it is a depression, but unlike the depression of the 1930s, where people at least got the benefit of falling prices, that provided some relief. During the Depression, you lost your job, but at least the cost of living went down. And if you didn't lose your job, you were actually better off because you had your paycheck, and your paycheck went further because consumer prices fell during the 1930s. But this time, even the people who don't lose their jobs are going to suffer because they're going to lose the value of their paychecks. They're going to lose the value of their savings because everything that you need to buy is going to be a lot more expensive. And that's going to compound the burden for the unemployed, because not only are they going to be without jobs, but their savings are going to be destroyed. And even if they get checks from the government, it's not going to be enough to afford the basic necessities. Well, they never see any disasters coming, or if they do, they lie about it. They don't want to admit it. I mean, why couldn't they see 2008 coming? That was obvious. Why couldn't they see this inflation problem? I mean, they were claiming it was transitory when it was obvious that it wasn't. So it's all about spin when it comes to the government. They're never going to be honest. They're either going to lie about what's going to happen, or maybe they're just so ignorant that they really can't see what is clearly apparent to anybody who objectively looks at the facts. So you've got to think for yourself and recognize that the government is never going to tell you about a crisis. You just need to prepare for it yourself.
Peter Schiff believes that there is a looming shadow of a potential depression. Let's rewind to 2008, when the financial crisis hit like a wrecking ball. It took the government completely by surprise, despite the warning signs that were flashing like neon lights. And guess what? The same pattern is repeating itself with the current inflation problem. But this time, it's not your ordinary depression like the one our grandparents told us about. Nope, this one's got a twist. He highlights that even if you're one of the lucky ones who manages to keep their job, you won't be spared from the grip of this economic monster. The value of your hard-earned paycheck and precious savings? Poof. Gone, my friend. It's a tough pill to swallow. Do you agree with Peter Schiff's viewpoint on this double whammy? Are we entering a financial crisis worse than that of 2008? Let me know your thoughts in the comments section below. And of course, don't forget to subscribe to my channel for more updates on crypto and the economy. Also, be sure to give a big thumbs up to this video. Thanks for watching, and we'll see you in the next one. Adios.